Hello, Lifecard family. Welcome to another interesting episode of the investment show with Michael on Lifecard TV. Guess what, guys? Today's episode is going to be very interesting because we're going to be talking about real estate profit and revenue. Now, guys, I believe this is something you as an investor should know and understand if you're going to go into investing in real estate. Think about this as the technical analysis behind the scenes of your real estate investment so you can get it right the first time and when you're going into it. But before then, if this is your first time on our channel, kindly like, subscribe, share, and drop your comments so we can be able to bring in more content and more engaging videos that you like and enjoy and you can share with your friends and family. Okay, guys, let's get straight into it. Now, before we dive into the mathematics behind the revenue and profits, we've had people call us over time and say, if I invest 10 million in real estate, how much am I going to get in 6 months? If I invest 50 million, how much am I going to get in 5 months? Now, let me explain something to you here. There's a difference between when you are buying real estate, for example, land or apartment from a company that's selling, and when you are giving your money for them to invest and give you a return on your investment. Now, that one, the second part where you have to give them your money for them to give you an ROI on investment is where you have to be careful because there are many companies out there who are promising you 30% on your investment, 40% on your investment. But what we encourage you is to buy this property for yourself, and then we'll show you and give you the reason why these properties are going to appreciate in the different locations where they are situated. All right, so if you understand that, let's get straight into the business of today. So we're talking about real estate profits and real estate revenue. What is the difference and similarities between the two? Definitely the profit and revenue talks about money coming into your pocket. If you're getting profits, money is coming to your pocket. If you're getting a revenue, money is coming to your profit. But there's quite a difference. And in this episode, we're going to be very practical. So let's start with revenue. So I'm going to use land banking, for example. So let's say you bought a property in Ibejuleki for 10 million in 2022, right? And then 3 years later, probably in 2025, that property appreciated by 50%, 100%. This is just an example. And then in 2025, that property goes from 10 million to, let's say, for example, 25 million. If you decide to sell this same property, your revenue here is 25 million. Because this is what you sold it for, and this is what came in. This is your revenue. REV for revenue. So you want to know your profit. So your profit is the difference between how much you bought it for and how much you sold it for. So when you divide, if you subtract how much you bought it for, which is 10 million, the profit here is 15 million. So you had a revenue of 25 million when you sold it in 2025 after buying it for 10 million in 2022, and then you got a profit of 15 million once you subtracted your revenue from your income. So that is your revenue and profit. Also, if you bought the same property for 10 million in a bad location and you realize that the property did not appreciate over time, then you tend to sell it. So let's just assume you bought the same property for 10 million and then you sold this property for 8 million. So your revenue is 8 million. So in this case, if you want to do the mathematics like we did, 10 million minus 8 million. So you lost 2 million. So you didn't profit, so you lost. So this is revenue and profit and loss for land, and let's say we're doing land banking. So let's talk about an apartment, for example. So let's do, stay with me guys. I told you I was going to be very practical into this session. So let's do apartment. You bought a property off plan for, let's say, 35 million. 35 million, right? It was off plan. Let's assume it was fully finished for 35 million. And the going rate, okay, it's a 2-bedroom apartment. And then the going rate for a 2-bedroom apartment is, let's say, 50. But you're buying at 35 million because it's off plan. Now, once you are done with this and you decide to sell, or what you call flipping, when you sell it at the current market price at 50 million, the revenue you get in is 50 million after you have sold. Remember, you bought at 35 million and now you are selling for 50 million. So this is your revenue because this is all the amounts that came in after you have sold. So now, how do you calculate the profit? It's simple, like we did in the previous calculation for land. 50 million minus 35 million. So you get a profit of 15 million. Right? So your revenue was 50 million because you bought for 35 and sold for 50. So the money that came in was 50 million. And then once you deducted your cost from the selling price, you got a 15 million naira in profit. Same thing happens for a loss. If you bought the property for 35 million and then for some reason you were in some sort of distress and then you sold this property of 35 million for, let's say, 30 million. And you sold for 30 million. You would have made a loss. You'd have made a loss of 5 million. So this is how you calculate for a profit and revenue, or even possibly a loss in real estate, either land or either apartment. So why is this important for you as an investor? I believe you are investing for cash flow. That's the mindset of an investor. You're investing for cash flow because you want to earn an income or a profit, not just a revenue. So you want to invest with having an understanding of a technical analysis where you're putting your money in. Is, for example, if it's for land, you intend to buy land and sell it in the next 3 years. Do you know the factor that's going to make your land appreciate in the next 3 years? So knowing this fact or having this insight will let you know that, okay, a land of 10 million, I'm expected to get a profit of 20 million in the next 2 or 3 years. But if you get your facts or your insights wrong, there's every possibility you're going to be running at a loss, even if you're investing in land, because of you missed your fact or you invested in the wrong location. So it's the same thing for apartment. So apartment as well, if you tend to buy to flip, then you also need to know the going market rate for the apartment. If not, you might just be buying and then you're making a wrong choice. So guys, this is why it's important for you to understand what your revenue is, what your profit is, and how you can know the difference between it, how you can calculate how you're making profit in real estate. Once you understand this, added to your technical analysis before you invest, you are on a short path to knowing that you're making the right investment call. But if you don't know the difference between your real estate revenue and your profit, there's every tendency that you are making the wrong choice. And that's why we are here every time to inform you, educate you on the right investment decisions to make before you go ahead and making your investment call. So guys, that's it for today. It's just a brief session. I hope you got something, I hope you understood the difference between revenue and profit and how you can make your calculations in real estate. Remember what I said, if this is your first time on our channel, kindly subscribe, like, share, and if you're an old-time subscriber, leave a comment in the comment section so we know that you're following. Alright guys, so we'll see you next time on the investment show right here on Lifecard TV. My name is Michael. Join us today. Have a beautiful time. Bye.